Friends, hello and welcome to our today's session. Since last session, we are trying to understand how to compute income tax for individuals. I think all of you must have understood that concept, understood what is the implication of slab rates that up to certain income, the total income will be taxed at a particular rate. And beyond that, tax rate will change. And beyond that, tax rate may further change also. And in certain situation, on that tax what we are computing, you might have to pay some surcharge in addition to tax. Is it not? So there is something income tax you can compute plus surcharge might be applicable. And in the context of surcharge, we have also understood one more thing, that is marginal relief. Okay. Sometimes if the income is slightly more than a particular limit, one may have to pay surcharge. So in that situation, considering the hardship to the shareholders, hardship to the taxpayers. So there is provision in Income Tax Act under which a marginal relief can be allowed to a taxpayer. Marginal tax relief concept you have understood, is it not? So marginal relief is allowed in such a way that your additional income, or sorry, the additional tax that you are paying on the income is not going to exceed your additional tax. Okay, suppose for an individual, surcharge is applicable when the total income exceeds 50 lakh rupees. Suppose someone is having total income of 50 lakh and 100 rupees. So we'll be calculating what is the tax and surcharge. But on that, marginal relief will allow in such a way that the additional tax that he is going to pay will not exceed that 100 rupees. In the previous session, we had discussed that concept. Okay. Yes or no?
Yes, sir.
Yes, sir.
So having understood that, now we have understood who are the assessees, who are the persons, what is the total income, what are the items that constitute total income, what is gross total income, all these things we have understood. And also we have seen what is the rate and rates, what are the slab rates, and what is the surcharge, and how health and education cess is computed. All these things we have understood so far. Now, friends, this is time to understand a little more about what are the various methods or various types of income tax. It may not be appropriate what to say types of income tax, because income tax in one type, but you may say various types of collections of income tax. Okay, you may say it's something called as the self-assessment tax, maybe advance tax, maybe tax deducted at source, maybe tax collected at source, TDS, TCS, withholding tax, like this. There are various mechanisms or various methods through which income tax is collected. We'll have some understanding about that. We'll also understand what is the concept of this direct tax and indirect tax. Both are relevant for us. Since we're studying tax law, we need to know what is the difference, whether a particular tax is a direct tax or indirect tax. That also we should try to understand. Then what we'll be learning today will be, we'll also try to familiarize ourselves about computation aspect. Previous session, I had shown you in the whiteboard how to do computation of different slabs. Now let us do it by using some calculators. Income tax calculators. These calculators are available in the income tax department's website. So they are very convenient to compute somebody's income tax if you know the total income. Okay. Okay, friends. Had I shown you earlier the use of tax calculators? I think no.
Yes, sir.
I had shown you already. Use of tax
Yes, sir.
calculators.
Last to last class you have shown, sir.
Okay. So, okay, fine. Good. Then fantastic. Just maybe I might have shown you for individuals. You can try for other types of assesses. So first, let us understand this thing, various types of tax collection. So let me share the screen with you right now. We are still understanding various concepts of tax. In this context, our plan is to understand these three things: types of income tax, types in the sense, in fact, various types of collections of income tax, collections type, okay, or how tax is collected by government. So friends, we might have heard the names of various tax, like income tax, goods and services tax, customs duty, professional tax, and many other taxes you might have heard of. Now, today we'll think out of that tax, what are the taxes which can be called as indirect tax, which are the taxes which can be direct tax. To understand this thing, first of all, I think all of us are quite aware of this thing. The tax is not a donation. It's not a voluntary. Okay, the taxpayers are not going to pay voluntarily. Therefore, it's not a donation. That means the taxpayer is paying so because there is a legal requirement to pay tax. That means this type of contribution which the taxpayer is making, or the taxpayer, the amount the taxpayer is contributing to government is enforced by some law. Okay, just like income tax collection, it is enforced by Income Tax Act 1961. And this money which is collected by government is normally used for various kinds of public services. So government or the society or our country has some socio-economic objective. So in order to meet that objective, government needs revenue, government needs money. So government collects money from various sources, and one of the sources is collection of tax. So direct tax collection, indirect tax collection. Through this, government collects some revenue. There are other methods also collecting revenue by government. Other sources are also there. So this time, after some days, you'll be seeing the union budget. So if you see, you can analyze that what are the various components to which tax is collected. Okay, not only direct tax and other taxes, there are other sources are also there. So you can have a eye on that. You'll be able to understand how government collects its fund and how the money is spent. Well, friends, now coming to this concept of direct tax and indirect tax, you may just go through this slide, have a look at this. Now, I request some of you, please read it. What is direct tax? Can anyone of you read this box? This one. Please unmute and read it out. About direct tax and
Direct tax. The person paying the tax to the government directly bears the incidence of the tax.
just wait a minute. Okay. Here what it says, the person who is paying tax to the government bears the incidence. Okay, he bears the incidence. What is that incidence? I will be explaining you. And now come here, read this point of indirect tax. Can you read it here?
Yes, sir. The person paying the tax to the government collects the same from the ultimate
customer, then ultimate consumer,
thus incidence of the tax is shifted to the other person.
Okay, so now in order to understand this thing, first of all, we need to have a clear idea what is this meaning of incidence. Okay. Achha. Now please read this particular line. What is incidence? Incidence refers to the
ultimate burden of the tax.
Ultimate burden of tax. Okay, I think since you are studying law, you might have heard of these terms. And there is one more term which also you'll be learning shortly, that is called as impact. Impact refers to
Initial burden of the tax.
Initial burden of the tax. Okay, so two things we have understood. Impact means initial burden, and incidence means ultimate burden. Okay. Okay, now try to understand the situation. Let us say today morning, you had purchased a packet of biscuit from a shop. Did you pay any tax? Did you pay any tax on that?
So not directly, but whenever a price is mentioned in a product, it says that including all the taxes.
Okay, so you have paid, that means you have paid some tax. Okay, maybe you have not clearly felt it. Okay, you didn't feel that money is going out of your pocket separately towards tax. So if what you have felt that you have paid for a biscuit, is it not? Now, who is paying that tax which is collected from you to the government? Ultimately, tax has to be paid to the government, is it not?
Yes, sir.
Who is paying that money to government? Who has paid it? That means who is depositing it with the government? Whether are you depositing or the shopkeeper is depositing? You have paid to the shopkeeper, but who has paid it to the government?
Shopkeeper.
Shopkeeper paid. Shopkeeper has paid. So immediately, when the shopkeeper has sold something or shopkeeper has supplied you something, then he has got a liability to deposit that money with government, and he has done it. So the immediate impact is on the shopkeeper. But what is happening? Shopkeeper is not paying it out of his pocket. What he has done, he has collected money from you and paid it to the government. Yes or no?
Yes, sir. Yes, sir.
Okay. So ultimately, who is bearing the burden? Ultimately, it is you who is bearing the burden. Shopkeeper has paid, but burden is not on him. If this is the kind of situation, if you feel that the immediate impact and ultimate impact are on two different persons, that means someone is paying to the government, but someone is bearing its impact. Ultimately, they're two different persons. You can call this kind of tax as indirect. But let us say you have to pay tax to you have to pay income tax to government. Can you transfer the burden to somebody else?
No, sir.
No, you have to
Yes,
bear
sir.
it. That means the person who is paying that money to the government, he has to bear the ultimate impact also. That means the immediate impact as well as the ultimate impact is on the same person. Okay. In any tax, if you find it like this, whether the impact is transferable, if it can be transferred, if it can be transmitted to somebody else, you can say that is indirect. But if you have to bear, then it is a direct tax. Okay, friends, I think you have understood this concept. That is what we are in fact discussing here. Now, let us go back to that picture that I was showing you. What is direct tax? The person paying the tax to the government directly bears the incidence. That means the person who is paying is bearing the ultimate impact. That means the burden of tax is borne by the person himself. That is so we can call it as a direct tax. Understood? Whereas in indirect tax, the incidence of tax is shifted to another person. Okay, someone has paid the tax, but burden is on different person. Understood?
Yes, sir.
Yes, sir.
Now, direct tax, like income tax, is an example of direct tax. It is called as a progressive tax. Why it is progressive tax? You see, the person who is paying it is bearing the impact. So there is a possibility that one can tax it in such a way that poor people can pay less tax and rich people can pay more tax. Previous session, we have discussed about the slab rates. Right? If your total income is up to 2,50,000 rupees, one need not pay any income tax if he is an individual. If it is in the slab of 2.5 lakh to 5 lakh, he may pay 5%. Is it? Let us say again 5 lakh to 10 lakh, he may pay 20%. Above 10 lakh, he may pay 30%. That means as the person becomes richer or his total earning is more, he is paying more tax. And if the total income is exceeding 50 lakh, in addition to tax, he is also paying surcharge. Yes or no?
Yes, sir.
Yes, sir.
That means rich people are taxed more, poor people are taxed less. So this kind of taxation system is called the progressive taxation system. So this is the objective of tax. Objective of income tax is to tax progressively, in the sense rich should pay more tax, poor should pay less tax. Okay, but think of an example of indirect tax, like goods and services. Tax is to be paid by the shopkeeper or the concerned dealer who is a registered person in the GST. Since he is a registered person, he has to pay the tax to the government, but he is collecting the tax from the customers, from the ultimate customers. Ultimately, who is consuming it, the ultimate consumer, rather, I should say, he is bearing the impact. And this consumer, whether it's a rich person or a small person, are they charged differently? Whether the packet of biscuit you purchase today, money, whether is it same for anybody, whether he's a rich person or poor person, or there is a differential pricing. For poor person, the packet is 30 rupees. For rich person, it is 130 rupees. Is it like this? Or it is same?
No, sir.
Same.
It is same. That means whether you are poor or rich, doesn't matter. Same amount of money he has to pay to the government. Okay, which is not good for the society. Therefore, this kind of tax is referred to as a regressive tax structure. It is regressive in nature. Its impact on the poor people and rich people are same. Okay, financial impact is other impacts. Poor might be suffering more because of this. Okay, because these are the taxes which are collected on the goods or services, not on the persons. The goods or services is same taxes. Of course, government has made some effort to bring some element of progressive taxation in it. How it is possible? GST rates are different from luxury goods. Okay, but if the goods is purchased by the same person, then tax will be same. For example, if you purchase a, let's say, luxury car, the GST rate may go up to 28%. Okay, in appropriate time, we'll be learning. So in our country, we've got various types of GST rates, 5%, let us say 18%, okay, 28%, like this. A luxury goods taxes are, but if that same luxury item is purchased by poor or by rich, doesn't matter. For everyone, taxes. Therefore, this type of tax, indirect tax, is was a tax which is regressive in nature. Understood? Now, I think you will be able to distinguish a tax whether it is direct or indirect, and also you'll be able to form an opinion whether this kind of tax is good for the society or not. Okay, it depends upon the objective of the government, whether he wants to collect revenue through progressive system or through a regressive tax system. So one can analyze the various sources through which tax is collected, and whatever is done that is right or wrong, one will be able to decide it. Okay, friends. Now, if you look at, yeah, you want to say something? Okay.
No, sir. I was just saying yes, sir.
Okay, thank you. Now, you see, now you can look at this chart. So if you take the example of indirect tax, examples are goods and services tax, customs duty is also a kind of indirect tax. Direct tax example is income tax. Okay, the other direct taxes which were there once upon a time, like wealth tax, etc., they are not there as of now. Okay, so now if we are in a position to conclude that where the tax impact and incidence is borne by the payer, that is the person who is paying tax to the government, that can be referred as a direct tax. Okay, so it's a charge which is imposed directly on the taxpayer and paid directly to the government by the person on whom it is imposed. So, but it's imposed on me, I have to pay it to the government. Right. So this tax burden cannot be shifted by the taxpayer to somebody else. Okay. And right. That means here the impact and incidence is on the same person. Coming to indirect tax, the incidence of the tax is not brought by the payer. That means payer is bearing the immediate impact, but it is not bearing the ultimate impact. It is collected by an intermediary. Your shopkeeper is a registered person. He has registered himself under GST law. And he has supplied some goods or services. He is an intermediary. He is collecting tax from you and depositing with the government. You cannot pay directly tax to the government because you are not an intermediary. You have not registered yourself under GST law. So indirect taxes are collected through an intermediary. And that intermediary can bear the immediate impact, but he can shift the impact to the ultimate consumer. Okay, and this indirect tax is included in the price of goods and services. Okay, and the customer pays for the goods, and along with the price, these taxes are collected and deposited in the government. Got it?
Yes, sir.
Yeah, now you'll be able to clearly identify. Now, so many taxes are there in the country. In future, maybe some additional taxes may come. So now you're able to form an opinion whether it's a direct tax or indirect tax, good or bad, all that. Now, friends, now coming back to income tax. Now, income tax is a what type of tax? Direct or indirect?
Sir, direct.
Direct
It's
tax.
a direct tax. It's a direct tax. Then we'll see. So government collects it from the persons who are assessees. We know what is the meaning of person. We also know what is the meaning of assess. Government collects it. And we are legally obliged. That means law enforces that the money has to be paid to the government. This is a tax which is enforced by law. Now, how that money is to be collected? There are various methods. We'll be seeing various methods of tax collection. I will do one thing. Let me take you now to the income tax department website. I will show you how to pay tax. Then you can understand how taxes can be collected. Just a minute. Let me share the screen with you. Friends, are you able to see the income tax department's homepage?
Yes, sir.
Yes,
Yes,
sir.
sir.
Good. Let us say previous session we have calculated tax. No, we know how to calculate tax, right? By applying various slab rates, or you can use here directly. You can find out the tax calculator. Once again, let me show you. You can use the slab rate tax calculator. You see, very conveniently you can calculate. Just let us see. Here is tax calculator. Okay. So in this part, you can find out the tax calculator. Other calculators are also there in appropriate time. I'll show you. Let us say this is the assessment year 22-23. Who is a taxpayer? Let us say we can find out something individual, HUP, OPBOI, farm, LLP. Next time, let us do it for farm. Okay. You say in case of farm, it is not asking you option. Are you opting for 115 BAC? Do you know why? That is a new scheme. Is it asking this option? Let me first show you. Let us say let me go to individual. Individual, you see this question is there, whether opting for taxation under section 115 BSC. That is the new scheme, is it not? New scheme means lower tax rate, but income might be more. Total income competition might be more because rebates and reliefs will not be allowed. Certain rebates and reliefs will not be allowed. Are you seeing this question?
Yes, sir.
Okay. So this is coming in case of individual. But if I make it farm, this question will not be coming because this particular new scheme of taxation is allowed only for individual and HUA. So let us say farm's total income, you can put something, let us say 12 lakh. So directly you can find out 47. Okay. So income tax you can find 3,60,000. Okay, there is no such for this type of income. Health and education says 4% on that. Tax liability is this. Now, once you know your tax liability, or one more example I'll say, let us say you are an individual, you are you are not opting for new scheme. Let us say you are, let me take an example of a female. So let us say the status is resident. So here we put some amount, let's say you are putting 20 lakh. You can find out this is the tax. Okay, how much money you have to pay to the government?
4,29,000.
Okay. Now tell me who has computed this tax? Whether you have computed or government has computed and given you. Who has computed that this much of tax is payable by you?
So as per the law and the provisions by the
Okay. As per the law, you have computed it as per the provisions of the law, but fact remains that you have computed it. Meaning you have found out what is your total taxable income, what is your gross total income, what is the deductions, and on that basis you computed what is the total taxable income. On that, you know the government's laws, so accordingly you have computed this is your tax liability. This kind of computation is called as the self-assessment because you are assessing yourself. And the tax you are going to pay is referred to as the self-assessment tax. It has not been demanded by the government. If the government has sent you a notice, that's a different thing. That's a demand tax. Government has demand. If government has sent you a notice, you see your income has escaped assessment. This was your income. Now pay this much of tax. Then what is this? Is it a self-assessment tax or government has informed you?
self-assessment.
No, in this case, it is a demand tax. Because this one is a self-assessment tax, but in case you get a notice, then it is a demand tax. So like this, various types of taxes are there. So once again, have a look at your screen. If you see, once computation is done, you know this much of tax is payable, then you have to think how to pay that tax. So you can go to Income Tax Department's homepage. Now, friends, you see, can you see here this link? Can anyone read it out?
Payment of taxes.
E-payment of tax. Let us click here. If you click here, you can understand that how one can pay tax. Right? So here you see, you can link step-by-step process has been explained to you. Okay, you can go to this link. You can click here. Okay, www.teen-nsdl.com. Then these challans are there for different types of taxes. Okay, challan 280, 281, 282, 283, 284. Okay, 26 QB. Like this, various kinds of challans are there. You need to have your PAN. If you are depositing tax deducted at source, you need to have a TAN. Okay, have you heard of what is PAN? PAN means, anyone heard of?
Permanent account number.
Permanent account number. And what is TAN?
No, sir. Maybe transferable account number.
No, it is not transferable account number. It's also not temporary account number. This is called as tax deduction and collection account number. Okay. So if someone is having TAN, with that he'll be able to deduct tax at source. So tax deduction account number. Right? If someone has collected tax, he wants to deposit, then you can deposit only when he is having TAN. So like this, various steps are mentioned here. So you can follow these steps and you can pay your tax. Okay, so you may visit to this website, go to this link, pay tax online. Please read these steps. Will you be reading this thing?
Yes,
Yes, sir.
sir.
Okay, please go through it and make yourself familiar. Right now, what I'm doing, I believe that you'll be reading it. So I'm going to the e-payment website. I can click here, I can directly go to the website. But you need to read all these steps. Right now, I'm skipping these steps. I'm sure you'll be reading it. So now let us go to click here. It will be automatically taking you to the other website. Okay. Now, let me, it is allowing us, asking me whether I am interested to go to this external site. I'm saying yes. Now you see the site which I told you, okay, in does NSDL. So now this is the site. Now you can see what you are saying here, e-payment of taxes. Okay, and these are various challans. So as you can see here, challan number 280. It is for TDS TCS by company or non-company as deductees. So only deductors can pay through this challan. Now you see challan 280. You can see this is a payment of advance tax, self-assessment tax and regular assessment, tax, that is surcharge, tax and distributed profit, okay, of domestic companies, okay, like this, dividend distribution tax, etc. Similarly, challan number 280, security transaction tax, okay, wealth tax, gift tax, okay, expenditure. You see, wealth tax, gift taxes are not there. You might be wondering then why this link is there. This link is there. There might be some old case which is still going on. And let us say authorities have given direction to pay that tax. Then how can he pay? He can pay through this challan. Then challan for banking, cash transaction tax, and fringe benefit tax. So these are, you see, various things. Okay. Now, if there is some black money, some wants to pay a payment of demand, penalty, interest, then you can pay through this challan. Okay, equalization levy is also a kind of tax in the turnover for some this thing. E-commerce operators, foreign e-commerce operator, this is also kind of tax. Okay, so sometimes government comes with income disclosure scheme, voluntary disclosures of income like this. So if someone has to pay tax, he can use this challan. Okay, and somebody wants to contribute this thing, Pradhana Mantri Garib Kalyan Yojana 2016, he can pay through this challan. So like this, you see various payment methods are there. Okay, so now since you have done self-assessment tax, then I can click here. I can proceed. I can pay tax in this manner. Would you like to see the process?
Yes, sir.
Now you see, let us say we are selecting income tax other than company. Since you are an individual, let me select this. Okay. Then what you want to pay? Is it advance tax? So, tax. So let's say we are selecting this one, self-assessment tax. Okay, you can pay through bank, directly select a bank, any bank you can select. Then write your permanent account number. You select the assessment here. You can write your address, etc. You can fill up all these things. Okay. Then you need to write this CAPTCHA code. Let me proceed. Here I forgot one thing, state. State you have to select. All of you are able to understand?
Yes, sir.
You see, you have to confirm the details before that. After clicking here through net banking, against this PAN, this person is going to pay. Okay. Finally, if you agree the terms, click here, tick it off, I agree, then submit it to bank. Then you can link it through internet banking, normal process. It will be linked to the bank. You can give your user ID and password and pay. After that, it is a normal transaction. Okay, just like you make any kind of payment in, let us say, through e-payment, any kind of e-payment you do, you can do it. Once it is done, your challan will be ready. You have to pay it. Then you can download the challan. Okay, the challan will be containing one BSR code, amount, date. Okay, have you seen a tax payment challan?
Yes, sir.
Okay, so you can see it some other time. I will be showing you how challans look like. Okay. Okay. So this is how tax payment is done. Got it? Understood?
Yes, sir.
Now
Yes.
let's see various types of taxes. Just a minute. Yeah, or various methods, tax collection methods, we can say. These are the important methods. First one is, what is the first one? Will you read it out?
So self-assessment tax.
Self-assessment tax. Okay, here you are assessing your own income and computing tax on that. Second is demand of tax. That means government is demanding a tax and you have to pay. Third one is TDS. What is that? Tax deducted at source. Fourth one is TCS. Tax deducted at source means uncertain income. If you are paying that income to somebody, let us say you are paying salaries to an employee, or you are paying money to a contractor, or you are paying rent to a landlord, for this kind of payments, you are paying it, right? And you need to deduct tax at source. The related provisions will be learning, not that on all incomes, but in certain income. Sometimes only when it exceeds a specified limit, then you have to deduct tax at source. Okay, in those situations only it is applicable. If you want to understand that thing right now, then what you can do, you can go to the income tax tutorials. There is a full, you can say, handout kind of thing, full literature on this thing. What is TDS? You can read it. And if you want to know at what rate you have to deduct, then there's a link on rates and charts. You can find it up there. Can you do it? But did you understand the concept now? TDS means tax deducted at source. You are paying income to somebody and you are deducting tax at source. That is called as a TDS. A similar thing is also available. Similar kind of, not exactly similar, rather it is the opposite, I should say. TCS. TCS means, can you guess what is TCS?
Tax collected as source.
Tax collected at source. Okay, here what is happening? You are selling something. Let's say you are selling some scrap. Okay, now what happened? The purchaser is going to give you money. At that time, in addition to that money, you have to collect from tax from him also. That is called as TCS. That is one more method of tax collection. Okay. Then one kind of tax is called advance tax. Let us say you want to pay tax for the assessment year 2023, which is not yet started. You can pay in advance. Right now, you can. And certain kind of assessors, that means whose tax liability is more than 10,000 rupees, they're supposed to pay advance tax on quarterly basis. At the end of each quarter, they need to pay advance tax. Certain percentage of the income tax they have to pay on quarterly basis. So in fact, they need to assess what will be their tax liability, and that can be paid in this quarterly installments and certain percentage as per the provisions of law. That's called as advance tax. Okay. So I told you about self-assessment tax, demand of tax, TDS, TCS, advance tax, withholding tax. Sometimes when payments are made to non-residents, then just like TDS, some tax needs to be withheld. That is called as withholding tax. Surcharge, you know, that if your total income exceeds certain amount, then in addition to tax, one has to pay surcharge. It's a tax on tax. Okay, compute the tax on that tax, additional tax has to pay. Then health and education cess. This is computed on the income tax plus surcharge. So first compute what is income tax, then compute surcharge if it is applicable. Next step is arrive at the total amount of income tax plus surcharge. And on that total amount, compute health and education cess, which comes to 4%. Okay. And this money, this health and education cess, is collected for the specific purpose that government cannot divert to some other purposes. Okay, it is exclusively this money which is collected is reserved or earmarked for health and educational developments in rural areas. So a specific cess is collected by government and it has to be spent in, you can say, for that purpose. Okay, right? Understood this thing?
Yes.
Yes, sir.
Well, now one more concept, let us know. This is called as advanced tax. What is advanced tax? I was explaining just now. You are paying tax in advance. Normally, we had discussed this earlier. Income which is earned during the previous year is assessed to tax in which year? Income which is earned during the previous year is assessed to tax in which year? This is a question to you. That year is called as what? When tax is assessed. If income with assessment year, right? Exactly, that's right. Okay, income is earned during previous year and the same income is assessed to the tax in the subsequent year called as assessment year. Okay, that's the normal function. And also, you know, there are exceptions to that. 5 exceptions I had told you, non-resident shipping company, etc. The earlier classes we have discussed that. You can refer to the recorded video to understand what are the exceptions to that rule. Okay, now what we are talking about, okay, that is one thing, that income will be assessed to tax in the subsequent year. But in certain situations, one has to pay tax in the year of earning itself. That means in the previous year, one has to pay tax. Income will be assessed in the subsequent year, which is called as assessment year, but tax has to be paid in the same year. That tax which you are paying in advance, that means assessment is going to happen next year, but we are paying now. That is advance tax. And this has to be paid on a quarterly basis. Okay, so this is the concept of advance tax. As you can see here, you can look at this slide, what it says. That on a quarterly basis, before the end of the financial year, this tax collection has to be made. So due dates are 15th June, 15th September, 15th December, and 15th March. By 15th of these dates, like for let us say for the first quarter. First quarter means April, May, June. That has to be paid by 15th June. Then July, August, September, by second quarter. By 15th September, that means before the end of the quarter, you are expected to make it. Okay, then October, November, December. You have to pay advance tax by 15th December. And for January, February, March, you have to pay by 15th of March. Did you understand?
Yes, sir.
Okay. Friends, when you will be learning the chapter profit and gains of business and profession, at that time we will be understanding some kind of taxation where tax is paid on presumptive basis. Presumptive basis means it is presumed. If your turnover is this much, means your profit is this much, you have to pay tax at this rate. That is called as the presumptive taxes. And if tax is to be paid presumptively means that person also doesn't keep his books of account. If he doesn't keep books of account, it will be difficult for him to arrive at the quarterly sales, quarterly profit, quarterly advance tax. So what that person can do, he can pay it in one installment by 15th March. Entire advance tax he can pay in one installment by 15th March. Okay, instead of 4 installment, he can pay like that. So this option is available for only those people who are opting presumptive tax. Okay. And advance tax will be paid if the total estimated tax liability, okay, after adjusting tax deducted at source or tax collected at source, after adjusting everything, if the total estimated tax liability exceeds 10,000 rupees, that the person is supposed to pay advance tax on quarterly basis. However, resident senior citizens, that is the age of 60 years and more at any time during the financial year, are exempted from making payment of advance tax. Okay, unless such person derive income from business and profession. That means if a senior citizen is only having salary income, he need not pay advance tax. But if he is having business income, then he is supposed to pay income tax. He is supposed to pay advance tax. Okay, these are the dates by which how much percentage of advance tax has to be paid. Okay, we'll be discussing it shortly. Yeah, friends, if you look at this chart, you can find out the various due dates of payment of advance tax. Right. Okay. Now you can find out what are the due dates for various quarters. First quarter, what is the due date? Please read it out. Are you able to see it? Will you please read it out?
Yes, sir. So 15 June, minimum 15% of advance.
15% of advance tax has to be paid. Okay, by 15. So you need to compute what is your tax liability. That is annual tax liability, of which 15% you are expected to pay by June 15. Right? Then the second installment of advance tax is due on when?
15th September.
15th September. And how much you are expected to pay?
45%.
45% of advance tax. And the third installment of advance tax is due on
15th December, 75%.
75%. And the fourth installment?
15th March, 100%.
100%. Okay. Right. So this is that means you have to compute your tax liability. That means in advance, you have to find out my annual profit or my income will this much, on which my tax liability is this much. On that tax liability, how much you have to pay? You have to pay at this percentage, at this, that means at this rate. Rate, of course, you can find it out, but this much of advance tax you have to pay at different point. 15%, 45%, 75%, 100%. And if the person has opted for presumptive scheme of taxes, where tax is to be computed on presumptive basis, then 100% of advance tax can be paid before 15th of March. Okay, you need not pay in these quarters. Okay. Now I'm taking you to the Income Tax Department's website. You see, this is the home page. Okay, now you see here is a link, tax tutorials. I have to search. In fact, if there is a tutorial on advanced tax, then it is fine. Otherwise, I will show you the calculations. You see tax deduction account number. You see, this is the term we are discussing about this today. What is this? You can go through this the literature, you can understand. Okay, similarly for TDS and TCS, these things, the literatures are there. Okay, and there are many things are there, but right now I was looking for, yeah, for the tax rates, you can find it out for different kind of taxpayers. Okay, I was going through what are the details available. I request all of you to go through these details and think and try to see if something is relevant to you. So please go through it and read it. But right now I'll take you to one calculator, in fact, advanced tax calculator. Yeah, if you go to this rates charts and table also, you can find out the rates of advanced tax. Okay, let us check it once again. Let us say tax rates, advanced tax rate, withheld tax rates. Let me see if advanced tax rates are mentioned here. Okay, we'll search it there. Well, let me take you to this place, tax calculators. Here, there is one calculator for advanced tax. Let me see it. Just have a look if you are finding it. Yeah, I could find it now. Are you able to see it here? Advanced tax calculator?
Yes, sir.
Yes, sir.
Click here, you can understand. We'll see who is the taxpayer. Let us think the person is an individual. Whether he is opting for the new scheme, we'll say no. Okay, male, female, senior citizen, you can take any example. Let us say this time we'll take an example of a male. Residential status, let us say resident. Okay. Now it is talking about your salary income. What is your salary income? Let us say salary income is 15 lakh. Other things will say there is no other income, let us assume. Let us say profit and gains of business and profession, if we assume 0, or let us say it is 15 lakh again, or let us say it is 7 lakh again. Something, some examples I'm taking about. Agricultural income, let us say 0. Okay, you see other details are filled up here. Let us calculate. If you calculate, you can find it out. Your assessed tax is this much. Oh, sorry. Your assessed tax is this much. 4,91,400. How you have to pay it? By June 15, how much is to be paid? 73,700. By September 15, cumulative, that means earlier payment, this thing taken together, 221,130 should have been paid. By December 15, this money should have been paid, and by March 15, the entire 4,91,400 should have been paid. Okay, this is the cumulative money should have been. How will pay in installment wise? This much you can pay by 73,710, you can pay by June 15. Are you watching it? Are you able to see it? The second
Yes, sir.
installment of 1,47,420 you can pay. Third installment again 1,47,421 can pay. And the last installment of 1,22,851 can pay. So finally, the tax liability will be there. Okay. So this is one useful calculator. And similar to that, you can use other calculators also. Just like income tax calculator, you can also use TDS calculator. I can again take you here, tax calculators. Okay. I wanted to show you TDS calculator, right? Let me go to the second page. Yeah, advanced tax calculator I had shown you. Now you see tax calculator. Here also you can see the presumptive tax calculators. These things we'll be seeing when we'll be learning profit and gains of business and profits. At that time we'll be seeing. Now I'm trying to show you TDS calculator. So as you know, if certain payments are made, then the payer is expected to deduct tax at source. So let us say for this financial year, we're talking about the financial year 21-22. Let us say residential status is an individual. Resident type, we can see, let us say it's a company is making payment. When PAN will not be available, then the rate of TDS will be higher. Tax has to be deducted at a maximum rate. But if PAN is not available, therefore this question is asking, PAN is available or PAN is not available means the receiver's PAN we are asking. For example, let us say you are a company. You are a company. Let us say you are appointed a contract to do some work. You will be paying him money? Yes or no? When you are paying him money, you are supposed to deduct tax at source, that is TDS. How much TDS you are going to deduct? Now we are going to calculate that thing. But before that, you have to ask the PAN of the contractor. If the contractor says, no, I don't have any PAN, then tax has to be deducted at a higher rate. If he says, yes, he's having a PAN, then you have to deduct at a rate which is specified here, maybe 2%, maybe 1%. You have to see it here. Okay, that's what I'm trying to show you. Here, let us say the contractor is saying that I have the PAN. Then you can see it. If PAN is not available, then you can take it. If PAN is available, then don't take it. Let us say PAN is available. Okay, and you have to also see whether he is a non-filer of IT return, TDS, TCS, all these things. Now, for the timing, ignore that. Later on, we'll be learning what are those things. We'll see what kind of payments. This is the types of payments on which TDS is applicable. So only for these kind of payments, if these type of payments are made, then TDS is applicable. Okay, so you can select any one of them. So these are various sections. Under various sections, if payments are made. Since you are talking about contractor payment, you can see 194C. You can let us see. 194C is here. Are you able to read it here? 194C. See what is written here. The section name is 194C. Can you read it out? What is written?
Payment to a resident contractor, subcontractor.
Yes, that means section 194C says if you are making payment in any residence contractor or subcontractor, then you have a liability to pay tax. So these are the sections, various sections. Okay, one can easily check if someone is asking you on which payments I have to deduct TDS, entire thing is available. TDS has to be deducted for these heads, for these type of payments only. For other payments, one need not pay. One need not deduct tax at source. So since I'm paying to contractor, I'm selecting here. Okay. If it is a winning from resources, I can select 194. Okay. Suppose I'm paying to a professional for fee, then I can select 194J, fees for professional technical services. Okay. Now let us see here 194C, payment to resident and contractors. I've selected. What is the amount of payment? Okay, let us say I'm paying that person 5 lakh rupees. Then place enter, or here is Finally, calculate. After calculation, you can find out how much I have to deduct, how much tax has to be deducted.
10,000.
10,000. Understood the provisions of TDS? Okay,
Yes,
so
sir.
you can see in this case 2% got deducted. Why it is 2% if you want to understand? Then I will take you to that tutorial so you can easily, I can take you to the rates and charts. TDS rates should be available here. Let us say tax charts and tables are available here. We'll see the TDS rates. Are you seeing here TDS rates?
Yes, sir.
Okay, let me click here. Now you see these are the sections. Okay, TDS rates are here in this column. So the example we took is 194C. You see 194C is here. 194C, payment to contractors and subcontractors. Okay, you see, if it is paid to an individual or HUF, then 1%. Otherwise, it is 2%. So here 2% is deducted. Okay, that's what you have seen that on 5 lakh rupees, 10,000 rupees is deducted. Okay, and if you want to read this thing in detail, then you can go to section 194C also. You can click here, you can read the section. You can see this thing. This is the section 194C. Okay. Now, if you read it here, when the aggregate amount of such sum credited or paid is likely to be credited or paid during the financial year exceeds 1 lakh rupees, the person responsible for paying such sum referred to in this subsection 1 shall be liable to deduct income tax under this section. Okay, this is what about the liability. You can see entire 194C. What is the rate here? You can see any person responsible for paying any sum to any resident. Okay, in pursuance of a contract between the contractor and a specified person shall at any time, shall at the time of credit of such sum to the account of contractor or at any time, or at the time of payment thereof in cash or by issue of check or draft or by any other, whichever is happier, deduct the amount equal to, here it is said that at what rate it has to be deducted, 1% where the payment is being made or credit is being given to an individual or HUF. That means we are paying it to individual and HUF, it is 1%. And 2% where the payment is being made or credit is being given to a person other than an individual and HUF. So you have to see what is the status of the recipient. If the recipient is an individual or HUF, the TDS can be 1%. And if the individual, sorry, if the recipient is not an individual or HUF, let us say it's a company, then TDS has to be at 2%. Understood the provisions of TCS and sorry, TDS?
Yes, sir.
Okay.
Yes, sir.
Advanced tax calculations you have understood. I think TDS also you will be practically able to manage. Okay. What is this concept of TDS? The aim of this section, the aim of this provision is to collect tax from various sources of income. That means at the source itself, when we are paying money from that source itself, money is going to be collected. Okay. Who is going to collect? The person who is liable to make payment. He has to collect. Suppose you are paying it to contractor, you are liable to make payment. Now you can collect. Sometimes what happens, money is not paid, but it's credited to his account. I've credited to the contractor's account. That means amount is due to it, but payment has not been. But if you have watched the law carefully, when you're paying or crediting, Credit means we are also acknowledging this much of money is payable. At that time also TDS has to be deducted. Tax has to be deducted as well. Understood? Suppose salary has not been paid to you, but the company has credited in its financial books. In the books of account, has credited in your name. In that case also, company has to deduct tax at source and deposit with government, even if it has not been paid. Understood? So when a payment is made or amount is credited, in both the situation, TDS liability arises.
Yes, sir.
Okay, so you can refer to the section minutely. You can understand the implication of that. Okay, the person who is liable to make payment, he will be the deductor, and he has to deduct tax at source. Okay, and once tax is deducted, what happens? That person is also supposed to show the TDS certificates. He has to give the TDS certificate. And if money is deducted, that will be reflected in a person's account. Okay, and he can see it, that how much money is deducted. One can refer to a form which is called as the form 26AS. Have you heard of about this form? Form 26AS. Might have heard some of you. So if some money, some tax has been deducted, or on your account, somebody has deducted some tax because it is the government, that will be reflected in form 26AS. One can easily find that how much money has been deducted as tax deducted at source. Where it will be shown? Form 26AS. Would you like to see a form like that?
Yes, sir, please.
Yes, sir.
For that thing, what you have to do, you have to get your PAN registered in the Income Tax Department website. Okay, for academic purpose, let me show you one example. From here, from the Income Tax Department website, I'm taking you to the e-filing website. Okay. Okay, I'm opening one more site. Let me see. I think you are able to see a different site now.
Yes, sir.
E-filing, sir.
This is e-filing.
Yes, sir.
E-filing site. E-filing site, if you see, you can find out various things. And site address is this incometax.gov. Previously, I was taking you to the website of incometaxindia.gov.in, but this is only incometax.gov.in. This is called as the e-filing site of Income Tax Department. So, if you are having a PAN, you can register yourself. Are you able to see it? You can register. For that registration,
Yes.
you need OTP in your mail account as well as in phone. So these are the steps. If you have not registered, you can register yourself, register your PAN here. Okay. So if you are already registered, then you can log in. Okay, here you see two options, login and register. Register process you can complete by writing your name, PAN details, mail ID, and phone number. And that will be verified through OTP. After that only you'll be able to register. And you'll be given one password. User ID is your PAN. You can use the password to enter it. For example, let us say someone is registered, you can directly log in here. If you log in, you see how one can log in. It's asking your PAN first of all. Let us say, right, I'm writing your PAN. And it will be Yeah. There is a mistake here. Let me correct it. Now we can continue. Now you have to ensure secured access. Now you can give your password. When you'll be registering, you can set your password. After that, you can change your password also. Okay, after giving password, you can continue. So you will be entering into your account. Okay, you can find here. Your name will be appearing somewhere here. You can find it out. Okay, this is your site. You see, this is your page. You can say income tax in income tax department. Are you able to see it? So you can get your PAN registered. You can have your page like this. Yes or no? Will you be
Yes,
able
sir.
to do it?
Yes, sir.
So now many things you can see it here. You can go do e-filing later on. You can e-file income tax return. You can add a chartered accountant. Okay, you see various kinds of services available here for refund condemnation. All this detail you can see. If there is any pending action, you can verify here. And grievances one can submit here. So all these things you can find it out here. Okay. Okay.
Yes, sir.
Yes, sir.
Just I wanted to show you. Yeah, right now you can see the services part. Other services you can use there. Just a minute. Yes. So this site is new, so you have to search it here. Now you see, this is the e-file. Under that you see income tax returns. Are you able to see here?
Yes, sir. Yes, sir. Yes, sir.
What is this?
Sir,
Any-
view for 26 AS.
26 is that is what we are looking for. So this is a disclaimer. I can confirm. Now you can see 26 is form. I can agree to accept the form 1668 that we'll see. Let us proceed. Okay. Now, here is a link you see, view tax credit from 26 days. If tax is deducted, everyone can search here. Would you like to click here? Let me click it for you. Now you see, for a particular assessment here, you can find out what is the, let us say, let us say for assessment year 21, 22, I'm trying to know how much tax is deducted. You can see view as HTML or text file. You can see view and download. You can see it here. You can go down. You can check your status. And if you want, you can view and download here. If you view and download, you can find out. Okay, you see. So these are the deductors. People who have paid money, they have deducted. Okay, so this is the money paid. This is the tax deducted. You can find it for any year. Any year means let me go back to some other years. Let us see. Let us say you want to find out something like 88. What is the tax deducted? You can view. You can find out. Okay, for any year, are you able to see it?
Yes, sir. Yes, sir.
This
Yes,
is the
sir.
PAN. This is the financial year. Okay, so people who have paid money, This is the deductor. This is the money they have paid, and this is the amount they have deducted. So this is called a TDS. So if you go to the account, you can find it out how much tax has been deducted. Okay, is it clear to you?
Yes, sir. Yes, sir.
Okay, so let me log out now. Log out button is here. Let me log out. Okay. So friends, what we saw just now is that you can go to your go to the portal of Income Tax India. Okay, you can if you have not yet registered, you can register yourself, you can log in, and if some tax has been deducted, you can easily find it out. If tax is not due but still it is deducted, one can claim refund by filing a income tax return. Okay, are you comfortable up to this? Are you confident that you can register your PAN? You can also check your account. All these things are possible. Okay, the very purpose of showing you all these things is that you should be able to practice in the same night. Okay, if you practice, then you can do it. Yeah.
Yes, sir.
Now, friends, now you have understood the concept of the TDS, and you know it will be reflected in the form 26As. Now, there is one more method of tax collection. It's called the tax collected at source, or TCS. Okay, collected by the seller of specified goods. Some specified goods. What are the specified goods? Here you see the examples of those goods: alcoholic liquor, tendo leaves, timber obtained under a forest lease, timber obtained by any other mode, any other forest produce not being timber or tendo leaves, or sale of scrap. Suppose you are selling all these items, then you are expected to collect tax at source. Okay. In this case, you have to collect only tax at source. So there are specific rates. Later on, in appropriate time, you will be learning what is the TCS rates. Then, friends, there is one more type of tax which is collected, which is called as the withholding tax. Who collects that? The person responsible for making payment to non-resident foreign company is required to collect withholding tax. The tax is deductible at the rate prescribed under the Act or under the relevant double taxation avoidance agreement, whichever is more beneficial to the non-resident. So what happens? Many times there is a possibility of a double taxation. That means a particular income might be taxed in one country, might be taxed in different country. That mostly happens in case of a non-resident, because their income tax law is different, our income tax law is different. In that situation, what happens? We'll see that whether provisions of Income Tax Act or the provisions of an agreement, that agreement is called as a double taxation avoidance agreement. Whichever is more beneficial to the assessee will be applied. Okay, so we have this kind of agreements with various countries. That is called the DTA, or double taxation avoidance agreement. Let me once again take you to the Income Tax Department website. Just a minute. Give me one minute. Let me take you to the Income Tax Department website. For that thing, let me first log out from here. Yeah, now you are seeing the department's website. I'm taking you to the home page. Now, friends, you see there is a link called international taxation. See where it is there. Yeah, here you can find out International taxation. Are you able to see tax treaties, withholding taxes? So if you click here, you can find out that agreement our country has signed with various countries. Okay, you see country-specific agreements are there. So India has entered into so many agreements with various countries. You can go to next page. Are you able to search it? Are you seeing it?
Yes, sir.
Yes, sir.
Yes. Okay, so any country you can see. These agreements are in fact double taxation avoidance agreements. It's a kind of tax treaty. That means if a particular income can be taxed twice, how that transaction will be dealt with, that has been agreed upon between these two countries. So the provisions of income tax law or the provisions of DTA, whichever is beneficial to the assessee, that will be applied. Okay. Right? And withholding tax means a tax which is deducted when payments are made to the non-resident companies. Understood, friends?
Yes, sir.
Okay. Now, two more concepts we'll be learning. That is, what is this average rate of income tax and what is this marginal? If you read income tax law, sometimes in various sections you may come across these terms. Average rate of income tax. Average rate of income tax means what? It is defined under section 2 clause 10. Means the rate arrived by dividing the amount of income tax calculated on total income by total income. So simply arrive at what? What is the total income tax divided by total income? You can find out what is the average. There is a possibility that your income might be taxed at different slab rates, but average tax rate will average out all this. Okay, understood? Total income tax divided by total income. That is called as average rate of income tax. If some provision you come across when reading the Income Tax Act, it says it will be taxed at average rate of income tax. That means we need to arrive at what is the average rate, and that rate will be taxed. And sometimes you'll find instead of using the word average rate of income tax, the law says maximum marginal rate. That means the rate of income tax, including surcharge, okay, applicable in relation to the highest slab of income. That is the highest slab of income under individual is 30%. The rate applicable 30%. Plus surcharge you can add up that. Okay, so that is called as the maximum marginal. So these two are different things. One is average rate of income tax. Second is maximum marginal. Okay, sometimes we'll be referring to these terms. Understood this?
Yes, sir.
Okay, friends. Now, friends, having understood all these things, now we are in the position to understand the concept of income. So far, we have not studied the concept of income. Now, we'll be able to read the concept of income. To know that, first of all, we need to refer to the definition of income, which is provided in section 2, clause 24. So from here, this is in the slide, you can read all these things. But before showing you the slide, I would like to take you to the website of Income Tax Department. And for the bare act itself, let us see what is section 2, clause 24. Let me share the screen with you right now. Now, this time you have to guide me. I want to read Income Tax Act. Where should I go? I am looking for the term income. Now, I'm showing you the home page, right? Tell me, where should I go?
Sir, acts.
Acts. Okay. I click acts. You have to tell me step by step. Next, after that.
So first one, sir.
First
Income
one.
Tax Act.
Fantastic. Okay.
Yes.
Then, after that.
If you want to
Sir,
go by
to
section wise,
search.
then we can go section wise or a chapter wise.
Okay,
On the
let
left
it
side.
be in the section wise. It is already there in section wise. Let us say which section I should go. I am looking for the
Section 2.
section 2. Okay, I want the definition of income. Now, how can I search it?
Sir, section 224.
Yeah, so alphabetically I can search. Since you are aware of the section, you can say it is 24. So let me take you to the clause number 24. Now, okay. Now just have a look. Is it clearly visible to all of you?
Yes, sir. Yes, sir.
Now you have to
Yes,
answer
sir.
me one question. I will insist that before next session, you must have read, come prepared. You must have read this section. Section 24, you must have read. After that only, we'll be discussing about that thing. Now you see, just have a look at this and tell me what kind of definition it is. Is it an inclusive definition, exhaustive definition, or inclusive, exhaustive definition? What kind of definition?
inclusive.
Inclusive.
Okay. Now, if you look at here, you can understand it says income includes certain things. Okay, 1, 2, you see so many things are included here. So we need to actually understand what is this, what are all these things. So many things, you see, so many things are included in income. Okay. Okay. Are we able to see it?
Yes,
Yes,
sir.
sir.
It's specifically
Yes, sir.
listed, 18 items are already listed. And that too, it's an inclusive definition. That means that might be many items more than this also, because it's an inclusive list. Okay. And in some places you can find you need to refer to other sections also. For example, if you want to understand this particular item, you have to read the section 56. Okay. Then only one can understand. Like this. Sometimes you have to read to section 28. Then only one can understand. Okay. So all these items constitute our income. Same thing. We can see it, almost same thing. You see, it talks about income includes. So you see, various items are there. We'll be saying what are the items which are included. For your conveniences, I might have broken some items into more than one item. This is the total meaning of income. We'll be discussing about all this. Now, friends, when we'll be discussing the concept of income, certain we'll take help of certain examples or certain case laws. But right now, before going to enter into that section, try to understand. Income is different from receipt. Okay. Something you have received, that doesn't mean that it is your income. Suppose you have received a loan. Is it an income? Answer is no. Okay. And coming to receipt, all receipts are not. And coming to receipt, again, it can be a revenue receipt or capital receipt. So in order to understand the concept of income, we need to have knowledge, or we need to have an understanding about the distinction between revenue receipt and capital receipt. That understanding will help us to conclude that whether a particular receipt is income or not. Okay, why it arises? Why this problem arises? Problem arises because normally revenue receipts are considered as income, but there are exceptions to that. There are exceptions to the normal situation. Okay, and on the other hand, normally capital receipts are not considered as an income, but there are again exceptions. I told you revenue receipt, capital receipt. First, I told you we need to distinguish between income and receipt. Okay. Then once it is received, I also need to distinguish it whether it's a revenue receipt or capital receipt. And I have to keep this thing in mind that revenue receipts are normally income, but exceptions are there. Capital receipts are normally not income, but exceptions are there. So there might be capital receipt which are income. There might be revenue receipt which are not income. Okay.
Yes, sir.
Yes, sir.
So this concept we need to understand. Anyway, definition is there in the section, we can read it. But to understand that definition or to interpret the law or to understand the principles behind that section, we need to have knowledge about this concept. Okay, friends, is it clear to you up to this?
Yes, sir. Absolutely.
Yes, sir.
Okay, so thank you very much